And I think the system's going to break. And when it does, silver's going to be trading at the price it should be trading. And I think, once we get up, past 50, 60, 70, I think it's going to go to triple digits pretty quickly.
Today's guest is a supporting sponsor of Liberty in Finance. Welcome back to Liberty in Finance. We're delighted to have this returning guest who is well known in the precious metals world. Keith Neumeyer is the founder, president, and CEO of First Majestic Silver. He joins us this Monday, March 14, 2022. Keith, thanks for coming back on Liberty in Finance.
Well, it's great to see you again, Donegan.
I got to meet you in our last interview with you, and this is the second. And we wanted to talk to you about some flurry of questions that have been submitted for you by our viewers and prospective investors. They see a lot of very unconventional things that seem to be going on, not only on the precious metals exchanges, but also different miners trying to position themselves ahead of what can only be described as a very convulsive markets, with energy prices going up, big squeeze and convulsions in the nickel market, the major exchanges basically changing the rules around some of that. We want to know how the silver market will be affected by some of these themes. So could we start out by talking about what just happened last week, this big nickel squeeze on the major markets, and the fact that the market changed the rules to basically pick winners and losers along the way. Some people have questioned the validity of those markets in the first place, and the fact that First Majestic has taken some steps to protect itself from some of the risks that are associated with participation in those markets. Can you start with that? Is First Majestic's sort of strategic approach to hedging or not hedging, using the COMEX, for example, and how First Majestic is trying to reduce its basically its risk that can come from those futures markets themselves?
Well, we don't really use those markets ourselves. We have go-betweens or traders that have their own hedge books that they're financed by the banks, of course. So there is, I suppose, some modest risk. We've not experienced anything. In the 15 plus years that we've been, currently using the particular system that we're using, we've seen in silver, for example, when silver went from 18 to 30, back in March of 2020, it was 2021, pardon me, when we had the big Reddit squeeze. It was February 2021. The CFTC coming out and saying, oh, we successfully tampered down the market because, there had been so much damage occurred if the metal prices or silver price would have been allowed to actually do what should have naturally, occurred. So they stepped in front of a natural market and intervened and changed the market and just stood there and sold every paper ounce of silver they could until the buying disappeared. And once the buying disappeared, then they smashed down the market. So everyone that bought that silver, expecting to see much higher prices, was basically screwed by the government, screwed by the regulators, and coercively trading, with the banks. Now, once again, we see a very similar type of action in the nickel market, where you have a very wealthy group of people that, are obviously very much involved in the nickel market, on the short side. As we, very similar situations, the silver market, and they got squeezed, and it was, lots of money at stake, and, it goes to show you, if you're a billionaire and the right people, they'll protect you, and not only will protect you, they'll actually change the rules to protect you. And everyone that bought nickel, over that period of time were locked out of the market because they actually halted the markets. So you couldn't even get out if you wanted to. And they changed the rules anyway. So a lot of the trades were actually broken. These profitable trades that, people would have expected to walk away with a nice little profit. Yet, of course, the loser would have been the billionaires and the banks behind it. And of course, we can't allow, these people to lose any money. It's got to be the small trader, the small investor, the speculative investor that's making what should be a correct decision. Those are the ones that always lose, it seems. And it's just a crazy system that is in place. And the regulators just stand back, the governments just stand back, and they break the rules, and it just keeps happening. It's shocking.
So the natural question that was asked by a lot of silver investors last week was, could this same thing happen on the silver market?
Well, it should, and it almost did. The Reddit squeeze, was the beginning, you saw, I just saw recently a comment that came out on the weekend, and you have the Reddit crowd, similar, I suppose, to the crowd that came into the nickel market for the nickel squeeze. And there's been a couple interesting squeezes just last week. I don't want to name the company names on this interview, but there was a couple of noticeable ones. And there are groups of investors out there that think they could break the system and eventually, take it to the banks and take it to, the big players on the opposite side of the market and eventually, hopefully, convince them, to go somewhere else or maybe break them, whether that means breaking the COMEX or breaking the banks. I'm not exactly sure what that means. And I'm not sure if the normal guy in the street's even powerful enough to do it. You're talking about, a lot of money on that side of the trade. So if the government or the regulators don't want silver prices to go to $50, they seem to have been proven right many times that they can, change the pricing of these metals quite easily, as they continually do.
One of the things that people ask about is how miners can protect themselves and even operate in an environment where, in many cases over the past decade, it's been argued that the cost of production was higher than the spot price of silver on some of the exchanges. First Majestic has made some steps in terms of withholding some production or directly producing products and selling them directly rather than going through the exchanges. Can you talk to us about ways that First Majestic is basically finding alternative pathways to basically honest commerce and natural laws of supply and demand in the face of all of these, playing favorites and picking winners environment that we talked about?
Well, that's exactly why I've been so vocal. I come from a trading background, and many people who have listened to me know, that I was a trader, for the banks, back in the 80s. And, back then, we didn't have the computer systems that we do today. We didn't have the algorithms. We didn't have, the manipulation in the markets that we do today. And as the banks have got more influential and as technology has allowed them to, do some pretty astounding things in the marketplace. When you have a bank, let's call it, I don't want to pick on any bank because they're all the same, but, call it Bank of America, where they don't have a losing trade for 3 consecutive years. I think that was a stat I read a couple of years ago, or maybe it was one losing trade in 3 years or something. It's been a while since I looked at that stat, but whatever the actual number is, it's not natural. We all have losing trades. It's just a part of life. But, if you somehow don't have a losing trade for an extended period of time, you must somehow be, influential, or, I hate using the word manipulation, but, in fact, I think that's what it is. And, I think the miners, have to step up, and, we need to do deals directly with the end consumer. And just in a recent interview, I pointed at Elon Musk's investment in nickel, and his prior investment in lithium. And this could be the trend, because I think that, the consumers themselves are starting to worry about their supply, because, they're, just because the paper market in silver trades 1 billion ounces of silver a day, that doesn't mean the physical metal is available. It just means the banks and the manipulators behind the scenes are able to write that many contracts and trade among themselves or trade with the public and make these paper profits. And the metal never moves anywhere. It just, so it's a pretty ridiculous system. And as long as the miners just sit back and allow such a crazy system to price our precious metal that we, blood, sweat, and tears, get out of the ground and sell into industry, which is critical. Silver is a critical metal. I've called it a strategic metal a number of times. Supply is dropping and consumption is going up, and yet the miners just sit back and let this crazy paper market exist, and we just kind of fall into it and say, oh, that's okay. it's easy and, we get paid and we're all happy. But no, like we have a responsibility to investors who buy our stock, and we have a responsibility to the consumers that consume the metal, and that we need to have a relationship with both sides in order that it works for everyone. And right now it doesn't work as far as I'm concerned. So if Toyota or BMW or Tesla or Sony or, you name the industry or company, Apple, they want to buy, 50 million ounces of silver, the silver industry should have a setup similar to uranium, similar to, diamonds, similar to these markets that aren't on derivative markets. And we should be dealing direct with the end consumer and come up with a price that we think is the price of the day. And, until the miners get together and do such a thing, I think we're going to continually be under the mercy or the thumb of this current paper system.
What specific things has First Majestic done that are steps in that direction?
Well, be vocal about it, and continually be vocal about it, and try to talk to other CEOs and bring them to the table, and try to put up a system or put together a system that can facilitate such a thing. And it would take money, and it would take time, and it would be a pain in the ass to do, because the miners have a pretty good gig going. We not that we're making a lot of money, because the banks never let us to make the money we should be making, but we pull the metal out of the ground, we refine it, we pick up the phone, the traders, the banks tell us where to send it. It goes there, and we get paid within 2 or 3 days, and we don't have to worry about it. We don't have to worry where the metal goes. We don't have to have a sales force trying to find buyers. There's a system already put in place, and it's 30, 40 years old, and it's just super simple. And that's why the miners, there's no incentive for them to change it, because it works so well. But we're not getting the price for our precious commodity, our precious metal that I believe we should be getting. When you look at silver prices, where we're looking at a ratio of 7 to 1 for every 1 ounce of gold being mined worldwide annually. There's only 7 ounces of silver, and we're trading at 70 or 75 to 1. That tells you right there that there's a supply problem. And, you have 2 industries now. We don't know what 2022 is going to look like yet, but we know that there's a ton of demand for silver. And I'm hearing all kinds of stuff out in the system that are in the market that I don't want to repeat, because I never know what to believe or not to believe. But, there's some pretty interesting stats starting to come out whereby, I'm seeing numbers as high as 140 million ounces of silver to be consumed in the solar panel industry for 2022. And electric cars could be up in the or order anywhere from 120 to 200 million ounces of silver being consumed in the electric car industry. And then, of course, we don't know these numbers. We guess them, but because the auto industry or none of these industries who are big consumers of these metals, silver we're talking about, don't want to tell us what they're consuming. Try to find out how much silver is in a Tesla. Good luck. They're not going to tell you. But they know, Elon Musk knows that there's a problem out there. And I think, the sectors, I think the high tech sector is going to end up owning some of these mines just to protect themselves.
That leads us to the question about triple-digit silver. I know we interview Miles Franklin CEO Andy Schectman. He has a T-shirt that he got from you that says # triple-digit silver.
Well, we'll send you one. Give us your address. I'll send.
I love that. Thank you. So what factors in your mind will drive triple-digit silver, and how will First Majestic and other miners be affected by that?
Well, it's just, I threw out some stats, and, there's tons of other stats out there that people could do their own research on. But, just look at the simple math of what is happening in the world today. Look, I've stalked, many times. You Google this stuff. It's not brain surgery to find it. There's different numbers out there, because, I was even looking the other day, how much, what was it? Look, I was looking at nickel. How much nickel does China produce? And I got 3 different numbers. So, so you kind of, I guess, average it together and, come up with a number. But, nevertheless, in the case of the automotive sector, the stats I've looked at are there's like 1.4 billion automobiles sitting on the Earth's surface. the electric car industry a couple of years ago, because their stats are hard to get, but it's something in the order of 5 to 6 million electric cars were produced during this year that I was studying a couple of years ago, and in that year there was 65 million ounces of silver, we think, according to the stats again that I could find, consumed in those electric cars, for those electric cars. So you do the math, and so let's say 2022, the automotive industry produces 20 million cars, which is not many cars. 20 million cars out of 100 million cars. It's even if it's 10 million cars, you're still going to be consuming well over 100 million ounces of silver. It could be as high as 200 million ounces of silver, depending on how many electric cars are going to be manufactured. The miners, you know what they're producing. The miners are only producing 800 million ounces a year. So you got two industries consuming somewhere in the order of 200 million on the low side to as high as 300, maybe 350 million this year, 2022. Right? Where's the silver coming from? And that's why I'm starting to hear, I just hung up with an institution this morning out of London, England, and he's telling me that there's a bunch of rumors going on about some stuff that's going on in the physical market for silver right now, things that I actually hadn't heard that were happening. So, it's pretty interesting. And I think the system's going to break. And when it does, silver is going to be trading at the price it should be trading. And you do the math, so you call the $200 gold or whatever number, pick your price of gold, divide it by 10, and you come up with the silver price. It should be 7. But I'm just keeping, the math simple. So at $1,800, $1,900 gold, $2,000 gold, you're in the high $100 range. And, I think, once we get up, past 50, 60, 70, I think it's going to go to triple digits pretty quickly.
One last question is about energy. We've certainly seen a huge spike from a crazy low of actually negative 2 years ago to now, well over $100 a barrel for oil, and looking forward to how does that impact miners? How does it impact First Majestic Silver if energy continues to go out of control from an inflationary standpoint going forward?
Fortunately, we've got, two of our mines now on the liquid natural gas, which is, saving, even though gas prices are up. But we're hedged on that position, which is quite good. We hedged at much, much lower prices. But we have 2 mines on the electrical grid, 2 mines on LNG. We're looking at hydrogen right now as a fuel source for our mines, if it makes sense. It's still early days. We're in the early discussion with a group. And we'll see if that materializes into anything. But yeah, energy is a big component of mining. Without energy, mining stops. Well, without energy, the world stops, right? So how we get that energy is one thing. And oil prices, unfortunately, do have other side effects. For example, ammonia costs, cyanide costs, lubricants, things like that are products of the oil and gas industry. We have seen, increase in price. Some of the other things that are affecting inflation is lead times, for equipment and things like that. We're seeing those get out to levels that we experienced back in, 2010, 2011, during the last peaks of the market. So, these supply chain are being affected by different things. But, we're starting to see that show up. And, that just makes it slightly more difficult for the mining sector to actually produce the amount of metals that are needed, to supply industry, with all the great things that the governments are trying to do around the world to go green and, have more green environment and less environmental impact on our planet. So, the plan is great, but the timelines just don't match because, it's not going to be 2030, when we get off oil and gas, or 2035 or 2040. This is a 50-year issue that's going to take, that long in order to redo the electrical grid on the planet. And it's going to take much, much higher metal prices. I'm talking north of $10 copper, north of $100 silver, probably $40, $50 nickel. These are the kinds of prices we need in order to get the mining sector active enough. And we need government support. We need industry support. And we all need to work together to make a much greener environment, for all of us to live.
We've been speaking with Keith Neumeyer. He's the founder, president, and CEO of First Majestic Silver. Keith, really appreciate you joining us again here on Liberty and Finance. We'll put contact information for your company in the description of this video. Any final message you'd like to leave with our viewers?
Well, follow me on Twitter, Keith_Neumeyer. I'm not super active, but, I'm there and love to send stuff out, when something tweaks me. And, I send out First Majestic news, First Mining Gold news, through my Twitter feed and, miscellaneous other stuff. But, also, go to our website, firstmajestic.com. Look at the PowerPoint presentation. If you have any further questions about First Majestic itself, feel free to call the company at any time, or just look at our PowerPoint. But I am on social media and talking about stuff like this on a regular basis.
Well, you're quoted more often than almost any other industry CEO in the metals industry that I know of. So your reply to my question of what can you do about it is you say stay vocal. I think you're doing that. And thanks for being here and being part of that here with Liberty and Finance.
Well, thanks. I'm probably one of the most disliked CEOs out there because how verbal I am. But look, I'm passionate about this industry, and I think that not only can the mining sector do a lot better, but I think we could if we make some of the right moves, I think we could get a much better pricing environment for people who are really invested in this sector, in this industry. And one of the things that would really also be quite impacted are the communities that these mines are active in, and the children that rely on these communities, because if the mining sector really had the prices of the metal that it deserves, this capital can be reinvested in these remote communities that really have nothing else to do except report to these mines. So you're talking about educating thousands of children, feeding thousands of people, building infrastructure, roads, electrical, you name it, and it's a win-win for everyone if we would just have a better pricing system.
Well, thanks, Keith. Look forward to seeing you again here on Liberty and Finance as soon as we can.
Great. Good chatting.